Okay, end of the week, Friday, July 10th. We have 2 minutes till market opens. Off rip, if I compare the Wednesday candle, the Wednesday 1 day candle with ES and NQ, I can see that there is very clear rejection on both pairs. So for NQ, there is a rejection with this doji kind of candle. Now, I don't really trade candlesticks, but this is a very clear one with the bullish body, small candle body, long wicks, taking out liquidity of these lows over here and last week's low. Okay, very clear rejection, especially since we have this bullish flag. I did predict price creating the flag at some point, taking out sell side liquidity, and then continuing bullish. We did do that, just not as drastic of a sweep in taking out these lows as well, which is fair because if we're all the way down here, you could argue that we'll lose, bullish momentum. So taking out these lows, I guess, will suffice. Now on ES, also a clear rejection, but instead of a candle that looks like this, it's actually a candle that enters a 4-hour intermediate low. So what that means is there was a 4-hour bullish fair value gap, and there was a candle that just barely entered that bullish fair value gap. So that candle that prior candle has respected the bullish fair value gap. However, there's still more liquidity to fill. And even if there wasn't much liquidity, if price comes back down and takes out that low that was within the fair value gap, while also entering the fair value gap itself, that is just generating even more liquidity to drive price. Because let's imagine if that fair value gap wasn't there, the low is still there. Taking out a high or a low generates some kind of liquidity. It's just the question is to what extent. Now, the fact that it took out a low that is within a bullish fair value gap, that gives you two reasons to enter long. So that's the picture on ES. And both of those rejections are on the Wednesday candle. And then we can see our Thursday candle extremely bullish on the 1 day. Now the question is of today, Friday. So yesterday, the trade was entering off of this 1-hour bullish fair value gap right here, and then looking for a 1-minute inverse fair value gap break of entry and targeting a 1-to-1 ratio. That was the trade for yesterday. For today, it's a little trickier. We have no bullish confluences to work at on this end over here. Nothing on the 1-hour, nothing on the 4-hour, nothing on the 30-minute. So what we're going to work with is price action over here. And over here, we can see a 30-minute bullish fair value gap with this very tiny gap that we are respecting with this wick, candle body here, and on the 1-hour here, there's a 1-hour gap. So we are respecting that. However, the reason why I'm not that confident in entering longs is because we have an SMT divergence. ES has taken out their version of this high over here, this Thursday, July 9th high. Also, with the key level on ES being last week's high. So it's taken out this high over here along with last week's high, whereas NQ hasn't even done that. So there's a bearish SMT divergence on the 1-hour. That's a fact. How viable is this 1-hour bullish fair value gap when we have a massive bearish SMT divergence? What makes it tricky to, agree with the SMT divergence is how bullish we currently are. Very bullish. Taking out this liquidity. Massive rejection on the 1-day candle. So I guess if we were to be bearish, it'd be temporary and maybe a short taking out this low over here from 5 a.m. But at the same time, price could just slam right through these highs on NQ as well. That's very possible. We did have this 4-hour bearish fair value gap here, but we have a candle body close right above it. And this candle over here is not an order block candle. So I don't know how much I can support that. I guess this could be considered an order block candle right here, but I'm just not positive. So we're gonna keep it at that. We have a 1-hour gap right here, which also ends up being a 30-minute bearish fair value gap, which also ends up being a 15-minute intermediate high fair value gap. That is kind of where my strategy is coming into play. A bearish SMT while NQ is entering a bearish confluence. That will allow me to enter shorts. That's kind of where my head is at right now. Also 9:30 a.m. opened right here. We manipulated these highs. I like to look for an accumulation of price, a manipulation of price, and then a distribution of price. I guess this was our accumulation right here. Price manipulated buy side. It could now distribute buy side as well, or it could distribute sell side. Distribution is always like, it could be in the same direction or the opposite. That's a little difficult to say. That's where you kind of bring other factors in, such as this 1-hour bearish SMT divergence, such as this 1-hour, 30-minute, 15-minute bearish fair value gap. All of that is telling me bearish. If I was just looking at price like this and not zooming out and looking at this, I would think shorts without a doubt. But if you look big picture, we have a bullish flag. We have a massive rejection here. And yesterday's candle, full body, high volume. That is what makes it tricky to be confident in taking shorts. So let's assume that we don't take shorts. Okay, let's assume that there is not going to be an SMT divergence because NQ is going to slam right through these highs, take out previous day high as well. Let's assume that's the case. Then we'd want to enter a continuation trade, and that would likely be off of like one of the middle time frames, like 15-minute, 5-minute. If I were to do that, I have to wait a little longer. I don't see anything on the 15-minute, and I sure as don't want to enter a long if price pulls down from here and then I enter my long. For me to confidently enter longs, I need a full body high volume bullish candle that has taken out one of these two highs, and that will kind of tell me that we are absolutely disrespecting this bearish fair value gap here. We're disrespecting it. It has no strength. That will give me confidence in waiting for a retracement and then entering longs on a continuation. Until then, we're going to have to wait. Yep. Let's assume that we'd have to enter shorts any moment. Maybe could do... No, there's no 1-minute gap there. Gap is filled. Is there a 2-minute? Any second. Yeah, it's a 2-minute. There's a 3-minute now as well. So we need a candle body to close right below here. I need a candle body to close below here. And if we do that right now, if we have a candle body close right below this level, right below the open of these candles, of this 9:30 a.m. 3-minute candle, if I have a candle body close below that, that will give me my confirmation I need for 3 reasons. 1, the bearish SMT divergence on the high time frame. 2, rejecting off of a 1-hour, 30-minute, and 15-minute bearish fair value gap. And 3, because we have disrespected a low time frame bullish fair value gap, proving it being invalid. But I mean, I guess that's not going to happen from this candle right here. golden zone entry, right? On the fib retracement tool, I would have entered longs if this bullish candle ended up inverting a very low time frame bearish fair value gap, right? Same idea, but we didn't do that, so I'm not gonna. I like this rejection that we're having. It's a good rejection. Kind of respecting this 30-second, but if we look at 5 minute, yeah, by the time price even retraces back down here, the 5 minute time frame is going to end. So then we'd have to look for a 5 minute inverse fair value gap entry, which ends up being at the same key level as the 3 minute. So it doesn't really matter. Like we don't have to, because on the 3 minute, what's happening is that these were the three candles, and this candle took out this high, right? So it made that move, that sequence, kind of lose its credibility. But if the 5 minute is creating a standard fair value gap, that is always good news. Okay, we're gonna have to define our risk, I think, in a second. Okay, so this is 103 points, 103 times 2, about 200. 500 divided by 200, that's about 2.5 contracts. So what I'll do is I'll do 2 contracts. I don't want to over leverage here. And if I need to add positions, I'll do that. Yeah, again, looking for, yeah, all right, 5 minute time frame ended. Looking for a candle body breaking below this on the 5 minute now. So now we have to wait a full 5 minutes. Here's the issue. Let's say that one of the lower time frames does end up candle body closing, but immediately after those candle body closes, price reverses fast, starts going bullish. The 5 minute is going to lose its it's no longer going to be an inverse fair value gap break of entry, because you're going to have the candle body of the 5 minute be a way up here with a massive wick, proving that this bullish fair value gap is respected. That's the issue. So we have to be very patient with this, and it's this, trades like this, moments like this, where we on the 3 minute, I guarantee you, in the 1 minute left, we're gonna have a candle body close below this. There's probably already people entering short positions here, but we're gonna be patient. We're gonna wait for the 5 minute time frame to end, and we're gonna allow price to retrace back somewhere into this level, and then we will enter our shorts. And if it doesn't retrace back into that level, guess what? We're entering shorts at a pretty premium price, but that's okay, because at least we have full confirmation now. At least we're not entering. Look, you see exactly what I'm saying? Price is way down here. If we have a candle body on the 5 minute close up here, then this bullish fair value gap is respected, and it's going to look something like candle body closing here and price driving up from here. That's a problem. That's a problem, right? So we need to be patient and wait for the full candle to finish. So I'll pause and resume once the 3 minutes are done. This is exactly what I mean. Look at this. Look how high the candle body is now. Massive wick. If, by the way, at the end of the 5 minutes, if we have a candle body closing within this gap, I am changing my bias to bullish, because this is a standard fake out. It'll show all the low time frames inverting this bullish fair value gap, meaning candle body closing, but then on the higher time frame that shows the highest time frame fair value gap, in this case it's the 5 minute, right? The 15 minute is not showing a bullish fair value gap. In this case it's the 5 minute. The highest time frame will actually show us respecting the fair value gap, changing the narrative, stopping out everyone who entered sell positions, generating further liquidity to be bullish. And that's a very classic fake out move. It's not even like a fake out, it's a trap. It's a trap. So we're gonna wait, and then we'll take longs targeting We'll see. We'll see what we want to target. I'm just going to look for 1-to-1 ratio, I think. But look, I mean, clear as day. Clear as day. So let's define our risk for a bullish trade instead now. Let's say candle body closes somewhere around here. 66 times 2 is 120. 500 divided by 120. We could risk 3 micros. Because the way I'm doing the math is my max risk is 500. I want my stop loss to be at negative 500. No more. So my 1-to-1 ratio TP would also be 500. We're going to do it. Candle body close within.
Order filled.
We're in. Stop loss here. TP. Let's target that. Target that high for TP, right? That's it. And now we wait. I'll resume once price has either almost taken out my stop loss or TP, and then we'll reflect. Okay. Ended up hitting TP. 1-to-1 ratio. Saw the candle body on the 5-minute close within the bullish fair value gap. So exactly like I said, everyone who thought we were inversing this 3-minute, 2-minute, and 1-minute bullish fair value gap on the downside, they got stopped out, right? Their short positions got stopped out because they didn't look at the highest time frame fair value, which was the 5-minute. 5-minute ended up getting respected. Second I saw candle body close on the 5-minute, entered longs, targeting a 1-to-1 ratio, and we hit TP.